Welcome. My name is Sasha Moore, and we're here today for the Insider Insights live webinar, which is a collaboration between National Finance and Loans and Tax Debt Solutions Australia. By way of a brief introduction, if you're not familiar with either company, National Finance and Loans is a full-service asset finance brokerage and increasingly the referral partner of choice for brokers seeking to diversify but who lack the skill set, time, or desire to do asset finance. Tax Debt Solutions Australia provides tax debt advisory advice and provides practical tax debt solutions for companies and individuals struggling to pay tax debt and specialises in negotiating with the ATO and the state revenue officers. So the reason that we have brought together these two powerhouses is to help brokers to get a greater understanding of how to wrangle tax debt from an insider perspective, and that will be sort of from one lens, and then the other lens is what that means in a day-to-day environment and how to manage clients. So this very increasingly topical response to mounting tax debt, the ATO is intensifying its debt collection and continues to clamp down on business repayments, and it's catching many businesses by surprise. So this heavy-handed approach means that businesses with unpaid tax debts may risk being shut down if they fail to settle their obligations. And the great thing is we'll be getting some insights into why this is happening, what's going on, and what we can expect from an insider perspective from a previous tax debt officer. So what we're going to be covering in today's session is the change of focus from the ATO. So that's whether that's stat demands, summons, debt collections, application changes, all of these areas which are now having a different focus and intention from the ATO. As I mentioned before, what this means for business owners with tax debt, how to in a practical way, what to do if a client is reported to a credit bureau, how to manage tax debt in business, and how tax debt is affecting clients' profiles and business funding. So let me introduce you to our panelists today. We have Josie Gengamai from Tax Debt Solutions Australia. Welcome so much. I'm so glad you're here, Josie.
Great to be here, Sasha. Thank you very much for the invite.
Oh no, we're looking forward to picking your brain. And then we have Ebony Maxwell from National Finance and Loans. Welcome, Ebony.
Good morning. Good morning, everyone. Hope you're all well.
Absolutely. So, Ebony, I'm going to throw the reins to you because I know that you and Josie have been having an interesting offline conversation. So I'm going to hand it over to you and we'll just intervene with questions as they come through. So on that note, we love questions. So please feel free to feed through any questions you have via the chat function or through the Q&A function. And if it's really specific to a particular section, we'll feed those through. Otherwise, we have a Q&A session at the end.
Perfect. Thanks so much, Sasha. Good morning, everyone. Thank you so much for taking the time out. I know it's that time of year where there's busy functions and whatnot, so really appreciate you joining us today. So now, Josie and I potentially go way back, probably around about sort of like 10 years. And I was literally having an offline conversation with Josie the other day. And so her background at the ATO was basically the inspiration for what this webinar was about today. So I really would like, Josie, I'm going to throw like so many questions at you today, just wanting to really pick your brain and understand some things. So from an insider's perspective, obviously without sharing any classified information or any secret squirrel business here, tell us about what it was like working for the ATO and what made you sort of like go down that path.
Okay, thanks, Ebony. So I was a single mum with two kids, very young kids, and working at the ATO suited my lifestyle at that stage. It was very flexible. They got, great perks. They really look after their staff. And it was very close to home. So it ticked every box at that stage in my life. So when I worked at the ATO, I started in the superannuation area, so only collecting superannuation. And I took a lot of pride in doing that because people were at that stage, I mean, we're talking 14 years ago, there were a lot of people that never actually checked their fund to see that their superannuation was being paid. And then they'd go to retire and find that, for the last 20 years, their boss wasn't paying their superannuation. So that was, very sad. So we helped to prevent that. We put things in place and collected money so that people could retire comfortably. So I had a lot of pride in my job at the ATO. We then started to collect income tax and then integrated client account. Again, just using the same tools that are available to the ATO to collect that. So, we were issuing stat demands, DPNs, garnishes, firmer action warning letters, early action warning letters. We weren't reporting to the Credit Bureau back then. I don't think the ATO had the power to do so, but we certainly were putting all those things in place. So it was a great experience, I have to say. I was part of the social committee. I loved the people that I worked with. So yeah, my memories there are very fond.
Yeah, fabulous. And so obviously you've moved on from the ATO and now started your own company for quite some time, Tax Debt Solutions Australia. Tell us about what you're currently sort of doing now and how working at the ATO has potentially helped that.
Okay, well, I use the insights and obviously the knowledge that I had having worked at the ATO to build this business. I understand the culture at the ATO. I understand what's important to them. I also understand how they like to engage with the community to collect tax debt. So it allows me to have very effective communication with the ATO and to build those relationships that really help to achieve good outcomes for my clients and also for the ATO. At the end of the day, I'm helping to collect money. So I like to think that I work in partnership with the ATO. So obviously, working at the ATO, I was very restricted in how much I could actually help people. Lots of red tape at the ATO, we all know that. But, working for myself, I'm the Director of Tax Debt Solutions. I have the ability and the flexibility to be able to make decisions and to spend a lot of time with clients so that I can achieve great outcomes. So we now provide two services to people out there. We do remission applications and payment arrangements. So we find that people that come to us really need someone to just help them negotiate with the ATO.
Perfect. And for those that are sitting at home, like me, that have no idea about what the talk is, what is a remission application? Do you mind elaborating on that?
Not at all, thanks, Em. So a remission application is obviously some, clients come to us and they'll have really what we think is extenuating circumstances, really valid reasons for why they didn't pay and lodge on time. Reasons that other people within the same industry may not have experienced. So we'll meet with the client. We spend a lot of time just uncovering all the information that we need, and then we put that in a remission application, requesting that the commissioner consider the circumstance and remove all the interest and the penalties that are on the account, leaving just the primary debt. So we know that the ATO won't take a haircut off the primary debt, and so we never ask, unless, of course, you go into liquidation or go into bankruptcy. But if you want to avoid those, then we can ask the commissioner to consider a remission of the interest and penalties.
Thank you. That makes a lot more sense now. Thank you for that.
You're welcome.
Just wondering, how have you seen the landscapes sort of changed over the last couple of years, especially potentially maybe after COVID?
Yeah. So much. So previous to COVID, it was I still consider that business as usual. I know now they consider that business as usual, but it was lots of understanding, lots of compassion, lots of empathy. We were working with the ATO was almost a pleasure. You're both on the same page, trying to help people that were genuinely trying to engage in the taxation system to get through a difficult time. Now, it went. The tax debt went from 23 billion to 53 billion over the COVID period. So, during COVID, they stopped. It was 2 years of not collecting any tax debt. It was 2 years of, in some instances, they removed the treatment for GIC. So debts were not incurring any interest particularly in industries that were really terribly affected by COVID, such as fitness centres that had to close. they would just turn off the interest on that. So they really did increase the tax debt. Obviously, during that period, there were probably a lot of businesses that should not have been trading, that obviously, weren't being chased up by the ATO, just continued to trade, continued to incur debt. So there's obviously the ATO have the job now of collecting a significant amount of tax debt. So they're putting things into place. They're setting very strong boundaries. They're not promising things the way they were before. They would often say, we'll allow you to take 2 weeks, and we won't proceed with any legal action. Now they make a note of telling you that there are no guarantees, we could still proceed. So, I mean, they don't, but it's just a different language. There's definitely a different language coming from the ATO. They're coming down very hard. They're really moving cases along very quickly. They're going from early intervention to firmer action. And then obviously companies are being wound up, or, summons has been issued for individuals that aren't paying. And there is that new collection tool that they have now. Well, it's not a collection, well, I suppose it is, where they report people with over $100,000 debt to the credit bureaus. So that's the new one, the new power they have, and they're using it.
Yeah, nice. And I'm glad we're recording this, because I know you've mentioned that it was a pleasure working either for the ATO or with the ATO. So
Yeah.
I never would have actually thought that someone would even say that. So that's quite interesting. But have you noticed any difference from the commissioner? Like, the new commissioner's obviously come on board, and his focus is to reclaim the debt. Have you noticed any other changes from the last commissioner to what the new commissioner's basically coming and doing?
Look, I think it's still early days. He hasn't been in the role for too long, but I will say that he's also very determined and very focused on collection of debt. I have heard him use the words show compassion and empathy, which is really lovely to hear. And yeah, I think the difference really is that a lot of staff, I will say, the difference for me, communicating with the ATO, is that we don't get a lot of experienced ATO staff anymore. They have such a high turnover. They're outsourcing almost all their tax debt. Collectors are all outsourced, so they don't have the experience that tax debt collectors for the ATO had years ago, and the authorities have been reduced significantly. So there's a lot of escalations, and there's definitely been a lot of change. I'm not quite sure whether it was the new commissioner that implemented that. I do think it started when Jordan was still in the role, but yeah. Strong focus on debt collection for sure.
Yeah, fabulous. It's kind of interesting. So if I look at myself being in the lender space, so for those that potentially, I know I can see some familiar faces on the webinar as well, that might have known me from my Bluestone days. So I was with Bluestone Mortgages for nearly 10 years, and obviously where I used to deal a lot with Josie, and now I'm in Asset. But it's interesting to see like that the landscapes has kind of like evolved and changed. So I know, in my days at Bluestone, we could potentially pay out tax debt if someone was to have a tax debt. But if it had to be paid out in full, so we couldn't allow people to remain on payment plans. If we saw something that was basically on there, it had to be paid out in full. Now, over the last couple of years, I guess a lender's appetite has a little bit changed, where if they know it's kind of like a recent debt and they are on a payment plan, and it's not kind of overdue, that they will allow that to potentially stay in place and like put it in as a liability. Obviously, if it's older debt, then that will need to potentially get paid out. And even so, from a personal loans perspective, I know potentially, back in my day working with some lenders, it was kind of, no gambling, no drugs, no tax debt. They were the no-go on the no-go list from a personal loans perspective. And I know that's also changed. So where the lenders are kind of having it more of an appetite. So whether someone might have been PAYG previously, self-employed and gone to PAYG and have this tax debt, that and I guess even the verifying of that income. So previously, you know, if there was a self-employed person for a personal loan, you wouldn't normally have to have shown like the tax returns, which obviously don't show really great income. But now, you know, if they've seen sort of like potentially tax debt, even for personal loans, we can use items such as bank statements to kind of like verify their income. So just on the way, I guess, of the you know, tolerating, like, what is, if someone has a tax debt at the moment, what like interest rate are they potentially going to be getting charged with the ATO?
I believe it's between 11 and 12 at the moment.
Yeah. And so what options are available for them, like personally or business wise, if someone does have a tax debt?
So with the ATO will as long as they have the capacity to pay a payment arrangement along with their ongoings, the ATO will approve a payment arrangement up to 3 years. So that's what the ATO will offer. Now, there are times where somebody cannot afford to pay the entire debt, and we'll look at ways to reduce it. And if there's interest there, and if remitting the interest allows them then to service a payment arrangement, we'll put in an application. Obviously, they have to have extenuating circumstances. Without them, they won't consider that. But yeah, so they're the options. It's really a payment arrangement, and there's a few ways to get into that payment arrangement with the ATO. But you know, tax debt holds businesses back. Let's face it. If you have a tax debt, it really does hold you back from, you know, getting a better interest rate, you know, getting further finance. So it's definitely we find that businesses prefer to have it paid in full. And if they do that, obviously that's much better from an ATO perspective, because the ATO don't want to pay people to continue to collect a debt. They'd rather it paid off in full. So obviously, if you have that offer, they may consider the remission application in a more favourable light.
Okay, perfect. So you're basically saying, because obviously we do see this quite often where someone might come for personal loans. Obviously there are personal loans with higher rates, but there's also personal loans that potentially in the sevens, eights, which is going to be way cheaper than obviously paying the, you know, the interest rate with the ATO.
Yep.
And so, I mean, do you find that it's in the customers, I guess, maybe best interest to kind of pay it all out and start from scratch? And in saying that, if a customer was to pay it out, either it was via their personal loan or via their mortgage, then they've got the option of coming to you and getting, you know, like I think it's the remediation and getting some sort of back.
Yes, I know what you mean. I know what you mean. So if they've already paid it in full,
Yes.
the ATO will consider an application for historical GIC, even when it's paid. You know, they'll always look at the application, consider the circumstances. It's case by case. If there are circumstances and they believe they warrant a GIC, then they will return the interest that was paid to the client. But you know, you do have to have a very strong application. The ATO are definitely coming down very hard on GIC remission applications. They're not doing them as often, or approving them as often as they once did. There was a time historically where tax agents would say to their clients, just pay the primary debt and I'll get the interest off for you later. Then they'd pay the primary debt, tell their tax agent. The tax agent will get onto their portal, put in a request over the portal, and usually it would always be approved because the ATO would see the primary tax debt. Now they're just not approving any of those. So they're really scrutinising remission applications. It's very important that you have lots of evidence to support all the extenuating circumstances. You know, just give your client the very best shot at getting that remission by putting in the best application you can.
Yeah, that's great advice. And so how has the ATO really changed their stance on like the overdue tax debt for businesses and the way that they are reporting?
Yeah, so they're definitely using the reporting to the credit bureaus a lot now. Individuals, companies, wherever that tax debt is, if it's over $100,000 and it's over 90 days overdue, then it's reported to the credit bureaus, especially if you're not engaging with the ATO. So that's really the difference in how they're treating tax debt now. So I think you'll find a lot of people that try to get finance. When you do that credit check, they'll be like, oh, it's been reported. They won't know because they've missed that letter, that warning letter that the ATO sent to them 28 days earlier.
And we actually had a conversation last week about a personal, so it was a friend of mine actually, and so they had an Equifax subscription where they basically get like alerted to something's basically changed on their file. And so they got an alert and they've jumped onto Equifax and they've seen that they've been listed on their credit file is being like overdue tax. So what should a broker do or a client if that happens and they've basically found out that they have been listed on their credit file for the tax? Like what do they do? Where do they go to from there?
Yeah, good question. I actually had a client yesterday also call me and say their client saw them on a list and that they had been reported to the credit bureaus. So what to do? And that's a very important question because my client was like, we've got to get off that list. It's just going to ruin our business if we're not off that list. So what I did in that case was call the ATO and say this client is on the list and we need them removed. And then we had actually lodged a complaint. There was a complaint in the system. So they were reading a letter dated on the 8th of October. So they actually had been removed after we had lodged a complaint on the 22nd. So one of the things, I'll read it to you because I have one of those letters and I'll read it to you because it says your tax debt has been reported to the credit bureaus and what you can do. So, engaging with the ATO to manage your tax debts. We consider that you've effectively engaged with us to manage your tax debt when you've entered a payment arrangement, lodged an objection, have an active complaint with the Inspector General of Taxation or the ATO directly. Have an active review with the AAT, that's the Administrative Appeals Tribunal. Or have an active review with the AAT. So they're the things that you can do to make sure that your listing is removed from the credit bureaus. And that takes 7 days. So I'll give you an example. So if you were to call and put your debt into a payment arrangement, 7 days after that payment arrangement's approved, your listing would be removed from the credit bureau.
Okay, so that's great that it's not going to sit there and potentially hinder the customer for a long period of time if they jump onto it.
Yeah. And there'll be no history of it as well.
Yeah. And so obviously there are heaps of accountants that generally manage things for their clients. I guess like what's the difference between going to an accountant versus going to someone like yourselves?
I see.
Hopefully there's no accountants on here, but yeah.
Yeah, no. Really, accountants send me work, so they understand that. I don't compete with accountants. I'm not an accountant. I always say I complement the services of an accountant. You know, I'm in and out. You know, do my work. I think the reason why accountants refer me work is because they actually value their long-term relationship with their client. They don't want to get involved in the tax debt part, so they're happy to hand off to a specialist, and then I do my work and then give the client back to them in a much better position. Now the difference is that we spend so much time. We only provide 2 services, right? Remission applications and payment arrangements. So we invest so much time just digging deep and getting all the information that we need to put together a very comprehensive application. There is no accountant in Australia that puts together applications the way we do. They just don't have time to do that. They've got so many other things that they do. They run an accounting firm, so they're very busy with other things. So that's the difference. The difference is that we obviously have a much more, like every day we're working on that case. Every day we're managing the ATO. We contact the ATO and let them know that we're formally engaged and that we'll be negotiating on behalf of the client. So the client feels very reassured when they come to us that their tax debt is getting our focus.
Yeah, that's great. And I don't know if it was you or whether I heard it from somebody else, but it was kind of, I guess, like if you need brain surgery, you don't go to your GP for brain surgery, you go to a brain special, like a brain
It
surgeon to
was
make
me.
sure it was you.
Look, I'm not saying I'm a brain surgeon, but I mean the other analogy is if you wanted someone to build your kitchen, would you go to a handyman and would you go to a cabinet maker? So, you go to
Yeah,
a specialist to
yeah,
negotiate tax debt. We have negotiating skills that they don't teach accountants.
yeah, no, perfect. And what businesses, like business industries, have you really seen that's kind of been affected? Like, are there any trends that you've been seeing?
Tax debt tends to affect everyone, but obviously after COVID, it was construction, for the very obvious reasons, labor increases, material increases, you know, in the building industry, there was obviously, interest hikes that really stopped people from buying. So that was definitely an area that I was getting, a lot of construction companies coming to me asking me to help them with their tax debt. Um, I do think that will change now that with interest rates not increasing and also with the stamp duty that's being reduced for people that purchase new properties. I think it's very exciting for builders. So I don't know what's coming. I wish I had a bit of a crystal ball, but it changes all the time. Every 2, 3 months we see, oh, we've got two, for instance, I'll give you an example. Who have we got? We've got two, no, I think that's too specific, actually. No, I'm just going to hold off on that. But there, we've got two of the same industries, which is really unusual. In that particular industry, it was really unusual. But yeah, sometimes it's hairdressers. Sometimes, hairdressers can be notorious for not paying superannuation. But yeah, a real variety of different industries for sure.
Yeah, okay, perfect. And I'm interested to kind of know, is it more sort of like new startup businesses that kind of get into tax debt because of the fact that they potentially don't know what they're doing?
Mm.
Everything's sort of new to them, or are you finding that it's more sort of like the existing businesses that mainly have the tax debt?
So, in my experience, I think startups are really good and usually don't have tax debt. They put things in place, they're very conscientious. Um, I find the businesses that come to me are usually businesses that have never had tax debt before, but have been in business for a long, long time and have just really, come across some really difficult times. They might have like a huge client that really rely on. They might be 80% of their business, so really, really rely on, and then they go into liquidation. So that really throws that business into they try to get other clients. They have to really pivot quickly, um, and because they're missing all that income that their business relies on, they have to dip into their savings that they've put aside for tax just to keep people employed, just to keep the business up and running, and that might take 6 to 9 months. But while they're getting back on their feet and getting new clients, so it's our job to put that into a story and and explain that to the ATO so that they show some lenience.
Yeah, that's great. So what would be your I guess your takeaways for any business owners that you'd have? Like, what are some key takeaways that you would
Mm,
like to entrust in them?
okay, so there's always two. Um, I'd like to say, always put money aside for tax, even if you don't use it all for tax, but it's always good to have there so there's no nasty surprises when it's time for your BAS to come up or your income tax return. Um, and the other one is if you can't afford your debt, if you can't afford your tax debt, and I know a lot of people like, I have a business, I just can't afford the tax debt and the ongoings right now. But in 1 year's time, this is happening. I just need a bit of a break. And the HCO simply won't entertain that. Because the payment proposal they can afford goes over the 3 years. So I always say to people like that, make voluntary payments, weekly voluntary payments into your tax debt. Do what you can afford to do, because the ATO respect that a lot. They see that. The first thing they do when they're trying to collect is they have a look at what has this taxpayer done to address their debt. And if they see weekly payments, you are less likely to be treated, in a vigorous, rigorous, I should say, way by the ATO. They're more inclined to show some leniency, call you and actually have a chat with you, because they can see that you're making genuine efforts to address your tax debt.
Yeah, no, that's great. I mean, one of the things that potentially I saw like at Bluestone, is a lot of times we would go and speak to brokers, and we would potentially, and they would say, look, I don't see your type of business. They're sort of bad customers, that sort of thing, whether it was a tax debt or whether it was credit impairment or whatnot. They would kind of put them in the too hard basket, I guess. And so like obviously we would kind of try and educate the brokers to kind of say, look, these are not hard at all. These are going to be customers, they're going to be sticky customers that stay with you for life. And then when they're at the barbecues, they're going to be your biggest advocate and refer, their milkman, their dog, everyone basically over to you for business. So like, why do you think if brokers see that someone's got a tax debt, why do you think they like run for the hills?
Well, I think it's just, a stigma. Tax debt has this stigma attached to it, and lenders have shied away from it in the past. Mortgage brokers are used to that, and they're trying to get the easy deal across the line. I agree with you, Eb. I think if you are that broker that actually helps someone with tax debt, you know that they've probably seen 3 or 4 brokers that have said, no, we don't do tax debt. So if you're that broker that says, you know what, I can help you with your tax debt, it might cost you a little bit more in interest, but you know what, you get this lender will help you out. 12 months, you have an exit plan. 12 months later, you can go back to the main banks. But you have a strategy and a plan, and you help that person. You are going to be the broker that person will stick to for life. And you're right. And it'll be the broker that gets mentioned at parties, because, they're the broker that makes a difference.
Absolutely. And I guess they're not having to know the laws of taxation, etc. That's where you come in and can help guide them, provide a solution for their customer if need be.
Yes.
So,
Yes. Yeah, absolutely.
So that's great. And so like I'm interested, obviously, looking at time, I would really love to hear some case studies. And I'm sure we've obviously got some questions that have already coming in. So for everyone that, please feel free to continue asking some questions. So we'll get to them sort of a little bit later. But
Yeah,
just want
sure.
to hear some of the case studies that you're potentially like currently like working on.
All right. Okay. So I have a construction company, believe it or not, a construction company who had the director was seeing this tax agent, had been seeing this tax agent for about 20 years. The tax agent sadly had a bit of a nervous breakdown during COVID, but was trying to still manage their clients. And this director got so far behind in his business, not for lack of trying to lodge them, but this tax agent you become friends after 20 years too. And so you don't want to leave the tax agent that's going through a really difficult time. But in the end, the tax agent actually suggested to him he seek, find another tax agent, because he was just not able to continue to work, just couldn't do it. So he found another tax agent. He got him up to date. The new tax agent got him up to date. He was 2 years behind. And then we got involved. We actually got involved at the stage where he came to us saying, I've got a tax debt. This is what's happened with my tax agent. So I suggested to him he find another tax agent. He did that. And then at the same time, I engaged the ATO, let them know exactly what was going on, bought him the time he needed to actually engage another tax agent. And also then I spoke to the tax agent and said, well, how long will you need to lodge these? Arranged the additional time that was required with the ATO, which gave the tax agent some breathing space. They knew exactly what was expected of them, and they did that. Then I sat down, went through, we sat down for about an hour and a half, went through everything that went through this man's, life during his business life. And we put together a remission application to have all the interest during those 2 years that he was late remitted. The ATO approved that remission, which was great. I think it was over $200,000 of interest. So it was significant.
Wow,
Made a
that's
big
huge.
difference. Yeah, it made a big difference to the construction company, because then they were actually able to pay the historical tax debt and their ongoings, and get through that really difficult time. So that was a really great outcome. They had lots of employees. It would have been a tragedy to see the company wound up. So it was great to have the ATO work with us, and help get this director through a really difficult time.
And how long, like, I'm curious, with working with the ATO, how long for that process of this particular customer? How long
That's
was
a
that
good question.
process from sort of like starting to kind of finish? Would that actually take? Like, are
Yeah,
they slow to
yeah.
work with, or?
Yeah, no, not at all. Again, it's all about communication and engagement. They do what they can do. That's what's within their authorization. So yeah, no, in that particular case, we were engaged for a total of 2 months. So the first month, it was obviously, getting those lodgements up to date. And in the second month, we took that time to prepare our applications to the ATO and have them submitted, and then we follow up with the ATO. The ATO have a 28-day service standard, which I believe, I mean, they were really far behind after COVID, but I think they're up to date now. So yeah, that's the process. In that particular instance, it was a 2-month process, but in most instances where there's no outstanding lodgements, it's within 45 days, 30 to 45 days.
Wow, that's way quicker than what I was expecting.
I know.
Way quicker.
Things are
Perfect. Well, I love this.
improving.
I love your case studies one. Do you happen to have another case study?
I do. This is a little bit different. This is a couple that had not lodged for many, many years, many years. They had the challenge of raising autistic children, obviously. It was difficult for them. They were high needs autistic. So the two of them stayed at home caring for the children while they were trying to run this business. It was actually a successful business. And they needed that because back then there was no NDIS, there was no money, and so they actually used the funds from the business to care for their children and provide them the things that they needed. So the accountant put in a request for a remission of the interest, which was declined, and it was massive. So once they actually lodged all their lodgements, there was about $450,000 of interest on this couple, which would have absolutely destroyed their business. It would have
Absolutely.
sent them into bankruptcy, and it just would have been, the idea of it was horrible for them. So we put in we met with them. We spent hours just getting to know them both. We put in an application for both of them individually in the ATO. I will say the application that was refused by the accountant didn't have the evidence that we had supplied. So we supplied extreme amounts of evidence. So anything that we tell the ATO, we want to prove. So it's, everything was documented. We had photos. We had, there was damage to the houses where there was walls. There was exposed wires because one of the sons was just, making his way through the house. There was just things like that, and we had a very strong application, and thank God the ATO agreed and thought that the application was very strong too, and that there was a full remission granted to both of them, which in fact for the wife meant that she received $70,000 in return, because there was only interest. So this is another one of those cases where the accountant has said, pay the primary debt off and we'll put a request for a remission. So in her case, it actually didn't just clear the debt, it gave her $70,000 back because she had paid, she'd already paid historical interest. So that was a really good outcome.
Yeah, massive outcome. And I guess for me personally, I have an autistic son as well. So yeah,
Yes, I
just
know.
hearing things
Yeah.
like that, yeah, it kind of goes like quite close to home. So which
Yeah.
is
Yeah.
amazing. I'm curious to know what's either the biggest amount of tax debt or the longest time someone that you've had to deal with that haven't lodged their tax return.
Wow. Well, I think they were actually close to 20 years, I think. So I think
Oh,
that was
okay.
when. What was your other question? The biggest tax debt?
Biggest tax debt.
I would have to say the largest tax debt was probably 15 million.
Wow. Okay.
Yeah. Yeah.
Yeah, nice. And so obviously you've seen the reason why the tax is going hard at the moment is because of that COVID debt that they've
Oh,
obviously trying to recuperate.
absolutely. Absolutely. The government needs to collect the money. And there's 53 billion of tax debt out there. So it is incredible the amount of tax debt. So they're creating new teams within the ATO. They're always focused on tax debt. It's the hot topic there. So they're definitely issuing currently, I believe there's 3 new teams. They call them the rigorous teams, and they're focused just on issuing summons and DPNs and state demands. So not so much state demands, but DPNs and a summons. So and garnishes. So we're going to be seeing a lot of that in the next,
Yeah.
I'd say, in the next month. Obviously, the ATO will stop issuing docs at the start of December, leading up to Christmas, but then they'll, resume early January, mid-January.
Yeah. And again, putting you on the spot here, in your personal opinion, obviously they're doing the defaults and listings over $100,000 because obviously they've got to start somewhere and they've obviously got new powers to do that. Do you think there will be at time, whether it's 1, 2, 5 years down the track, that potentially they might bring in something that lists anything over 50 or anything over 10 or something? Like, do you think that they'll go below the 100,000 in your personal opinion?
Uh, I'd like to think not, because I think 100,000, I can't imagine the amount of people that would be reported. And it does create risk to businesses, because then you do, your name is out there, your public listing. If you're trying to get a loan, banks won't lend to you. So it sometimes it's counterproductive for the ATO to list someone because they may be trying to get a loan to pay the tax debt.
Yeah, absolutely. Yeah,
So,
absolutely. Huh.
so I'm hoping I don't see that. I'm hoping, but never say never. Never say never with the ATO.
Absolutely. Now I'm going to throw to Sasha. I believe Sasha might have a question for us.
Yeah, absolutely. And thank you both so much for your commentary. There's so many questions just sort of fly to mind. And it is definitely a really interesting topic, but I want to just flip over to you, Ebony, just from a lending perspective, because it's been really insightful to get some insights from Josie about where the ATO is at and obviously the prevalence of tax debt. But I'm really interested in your perspective, Ebony, just back to that stigma piece of tax debt, how you've really seen 2 things happen. Client profiles changing in terms of how over time, what is a vanilla client, and then equally what you've seen from a lending perspective for both a personal borrower perspective as well as a business borrower perspective in terms of wrangling this new normal.
Yeah, absolutely. So I guess I kind of like touched on it before from like when I was at Bluestone, like lenders changing like what their appetite is. So previously you might have somebody with a tax debt that lenders wouldn't lend to anyone with a tax debt. That's kind of evolved. And then you have like most of your second tier lenders, your Bluestones, your Pepper, your Resimax, your Ord, your MAs, etc. That will potentially pay out tax debt. So they used to, when they first were able to kind of pay them out, they used to want to look at them as if to say, well, how long's that tax debt been for? How do we know that if we pay them out, they're not going to get themselves into that same situation again? So we kind of want to understand, if we're paying this out, what are they going to do to kind of rectify that? But then that's also changed now, where it's kind of, I guess, a little bit more common for businesses to kind of have tax debt. And it depends on whether it's current tax debt or whether it's overdue tax debt. And so we understand, or will the lenders, I guess, understand that a lot of lodgements and tax returns aren't potentially up to date. And that's why there's alternative document around, so whether they can use to verify their income using BASs and accountant's decks and stuff. So generally the lender will, from a home loans perspective, will want to kind of like know, is it current tax debt? If it's current tax debt, then generally they will want it on a payment plan. Some of the lenders will potentially ask how much the tax debt is, and if it's under 100,000 or under 120,000, that they would potentially leave it on a payment plan and leave it in as a liability. If it's old, then potentially they may not want that still on a payment plan, that they would want to obviously draw a line in the sand, pay that out and fix that up. And like I said, when it comes to like your personal loans and things, we actually did a loan the other day for a customer. So one of the top reasons to pay out a personal loan is actually refinancing a major bank lender. And it was actually my hairdresser, self-employed. Josie, you actually mentioned a hairdresser.
Yeah.
And so she came to me, she had a personal loan with, let's just say ANZ Bank. The rate was 17.95%. And she also only had a small tax debt. I think it was about sort of $30,000. And she said, "Oh, Ebony, is it best, for me to just go back to the bank and get like a potential increase?" And I said, "No, absolutely not. You're going to get something much better interest rate." We ended up consolidating everything for her. So we paid out her current loan with a personal loan, as well as giving her that extra money to pay out the tax debt. And her rate ended up being like 8.99%. So she was a homeowner. She potentially had good credit. She just wanted to, she was PAYG. She went in the business for like a year. She put on all these extra staff. And she just sort of said, "Look, I know what I did wrong, but I just want to pay. I don't want to have to worry about having to have this debt and pay this debt off, as well as having to pay, I don't know the technical word, Josie, is it ongoings? Like the new tax?
The obligations, ongoing obligations.
Yes, correct. So they don't want to, it's a bit sometimes hard to manage the old and the new. So it was easy for her to draw a line in the sand and go, "Okay, I'm cleared up, and then I can get myself back on track."
Yeah, it's interesting because I do think that some people are really great at keeping up with their ongoings and meeting their payment arrangement. And then there are some people, when they have both, they focus on the payment arrangement because they feel like it's a commitment they've made. And then they kind of let the ongoing slide. And from an ATO perspective, it's increasing the debt and it will create a default in the payment arrangement. So some people, I think that's what I mean, paying off the tax debt, just pay it out, don't have that payment arrangement, and actually just focus on your ongoings. I think that's sometimes suits people better.
And I think also great insight, but back to also what Ebony was saying, I imagine that the rate of debt consolidation is quite substantial and is going to continue to be substantial as that refi piece becomes more and more prevalent to coincide with tax debt. So from a broker perspective, Ebony, what would you suggest brokers start to keep an eye out for potentially red flags? So what are some of the questions that they can start to be asking either individual borrowers or business borrowers to make sure that they're being proactive opposed to that classic, head in the sand about potential problem areas? How can brokers address this and help borrowers nip this in the bud?
Yeah, I think it's definitely a question. So I think when brokers are going through their fact find, especially if someone is self-employed, it's just a question. It's the same as if you were asking someone, do you have a HECS debt or help debt? It's kind of like, do you have if they're self-employed, do you have an ATO debt? Some of the documents that you potentially may see, so if they're alternative doc, you might be getting their ATO portals that potentially you may see. You might be able to see it on their bank statement. So you're actually seeing payments going to the ATOs. So it's just about asking more further commentary. Is it a current debt or is it an overdue debt, or just asking
Mm.
questions? Also on tax returns, so there might be interest payable to the ATO that are potentially on balance sheets and the tax returns as well. And so again, I think it's just a letting the customers know that there are solutions out there to potentially pay out these debts if need be. So whether the mortgage brokers put it through the mortgages, whether they're getting personal loans. Like I mentioned previously, it was a no-go with personal loans paying out tax debt. That can sort of change, and there are lenders that have an appetite in that. Again, previously with personal loans, you used to have to, if someone was self-employed, the only way to verify income was the tax returns, and potentially that's when you're going to see the tax debts there. But now
Mm.
there's, and then generally most of the times with self-employed, when we're working off tax returns, they don't service. But there's other ways using like their bank statements and things for self-employed that we can potentially use to service these types of debts to pay these ATO debts out there.
Okay, great. Thank you. Josie, I might flick back to you because I'm also conscious of where tax debt is a legitimate problem, and there are legitimate reasons to file an appeal or whatever the correct term is with the ATO. But we've focused on where we can do that. What are some of the areas where, particularly in TDSA, what would you not consider a legitimate appeal?
That's a good question. So when would we not put in another?
Yeah.
So there aren't many times, I'll be honest with you. We get people that have an application that's refused. If there is, okay, so the ATO will always consider another application as long as there's additional information that they have not considered. So I suppose if someone came to me and they said, this is the application, this was refused, and they had no other additional information, then we would not submit another application. However, we might, if we disagreed with the ATO's decision, we may ask the ATO to review their decision. This is definitely not going to the federal court. There is on their letter, when they, if you don't agree with this, you can go to the federal court. But there also is the option, which doesn't say in that letter, to ask the ATO to review the decision. So that's all we got. Now if the ATO come back and they say our decision is upheld, we agree with the decision that was made, well, there really is just the federal court. And I have to be honest, I've never seen one of my clients want to go to the federal court. It's a very expensive process. And look, the ATO know that people with tax debt really can't afford to go to court.
Thank you. And back to you, Ebony, in terms of that tax debt piece, and particularly with businesses increasingly incurring tax debt, and particularly now with the ATO's decision. Actually, I'll throw this question to both of you. Is there anything that you think brokers should be flagging with their business customers in terms of staying ahead of tax debt, or potentially warning signs of what to not ignore, or how can brokers harness this situation to try and preempt it from occurring?
That's interesting.
Even in their own business.
In their own business, I could say, but I just don't know whether the broker is the right person to have that sort of input into someone else's business.
Fair.
But in their own business, absolutely, again, just putting money aside for tax debt, and just making sure that when those obligations come up, you've put money aside to make sure that, you can pay tax debt. Short of that, there really isn't much else to do, because once you've done that, you're prepared.
But I think
And
just to
Sorry,
touch
go
on
ahead.
that point, I think it's really important that you have in your network. So brokers are quite resourceful people. And so I think it's about, most of them might have accountants as referrers for them as well, that if they see something they need advice to go to an accountant. I did see a question pop up from Rhonda as a broker, can we refer our clients to TaxDebt Solutions Australia? Which is absolutely so, and I'll get Josie to talk about that a little bit more. But I think it's like if you're seeing some things pop up, obviously brokers might not be qualified or know much about it to give that type of advice, that they can basically refer out to the people that can help them. So like Josie, if any brokers here had customers that they need help with, like what's the process they can obviously use your services?
Yes, yeah, most definitely. So I would encourage them to give TaxDebt Solutions a call, give me a call. I'm happy to put my number in the chat. Do they see that if I do that? I'm not
Yeah.
sure. Anyway,
We'll also send
I'll
your
leave that up
details
to, I
after
was going to say,
today.
I'll leave that up to you. But usually what brokers will do is they'll call me, they'll have a bit of a chat about their client, and then they'll introduce me to their client via email. They'll drop in the numbers, and then I take over. I essentially call their client, chat about their tax debt, and then start the process of trying to help them with their tax debt.
Thank you. And I think in terms of the takeouts from this, it's really beneficial to know that there are multiple solutions for tax debt. From a broker's perspective and from a business perspective, just to really know that the ATO is going to be increasingly heavy-handed. This is not going away, and the type of debt and the commonality of debt is going to increase. So really, my suggestion would be to really make sure, particularly with your business customers, you openly ask the question, where is your tax debt at? How is it being managed? Is there money put away and put aside for it to make sure you're not in that position? And should you get into that position, and as Ebony was saying, maybe it's a collaborative conversation with an accountant or otherwise to try and preempt it as quickly as possible. And then for customers who have even just accrued a minor amount of tax debt, to make sure that you're asking the question, are you on top of this? Do you need help? What does that look like? And based back onto Ebony's example, if they're paying a 17% personal loan, that there are other options to manage this. But we will have to wrap today. Thank you so much to everyone for attending. Josie, thank you so much for your insights. They were so invaluable. And I feel like we've got this little sneak peek from under the hood at the ATO. And as Ebony said, it was extraordinary to hear it being spoken of so favourably. So that's positive. And
thank
Ebony,
you very much.
Thank you so much for taking the reins of today and for all of your insights from an on-the-ground perspective. As we mentioned, we will be in touch with our CPD points, and we'll also be in touch with Josie's details and Ebony's details. Thank you again, and we'll look forward to seeing you next time.
Fabulous. Thanks, everyone.
Thank you, everyone.